Hi, I'm Nate Reardon with Wenniker Reardon and West Coast Franchise Law. In our capacity as bankruptcy and insolvency attorneys at Wenniker Reardon, we help solve complicated bankruptcy problems. We work with small businesses and business owners. In our capacity as franchise and business attorneys in West Coast Franchise Law, we work with franchisees to help them get their deals done. In both contexts, and for different reasons, we have found that our clients are showing up having overlooked the availability of employee retention credit under the CARES Act. Employee retention credit allows qualified businesses to receive a refund of up to $5,500 per quarter per full-time employee in quarters that they qualify. So if you and there's a lot of misunderstanding about what actually qualifies. The language is, it calls for a loss of revenue, and it has a percentage or other financial impact. And that's where the key is. And that's where we have found some great results for our clients. We've paired with a tax accounting firm that assesses our clients' eligibility for refunds under the ERC, and they're doing a fantastic job. And so we're putting the word out to try to get more clients, just more people aware of the availability of this. Whether this was a wise move by the government or not, I couldn't say, but my clients are all paying for it one way or the other. So as an insolvent or financially distressed entity, if you come to our business and we're assessing you, the first thing we're going to ask you right now is, have you applied for the employee retention credit? $5,500 per full-time employee per eligible quarter. And right now, I believe there's like 4 quarters eligible. That's, and it could be higher than 5,500, but that's about the average. You're looking at about $22,000 per employee for a full year. Now, if you have 100 employees, this is starting to add up very, very quickly. And it's something that just simply can't be overlooked. And if you have any doubts, you really need to talk to, we think our people. So when people show up and they've got financial distress, what we've been doing with the ERC is finding our eligibility for it and then talking to creditors about it, repaying taxes with it, buying time, using it to infuse cash to continue operations. There's a lag, but typically we've been very effective in using the fact that this money's coming to get results for a client and to get them to take the next step, whatever that might be. And sometimes it's just paying back taxes. Sometimes it's paying landlords. Sometimes it's actually assigning the proceeds over to the lender. We've had a lot of great results with it. On the business side, working with our franchisees, that's where there's a lot more uncertainty. There is a purported stated cap at 500 employees, but the folks we work with have found ways in which you qualify even if you have more than 500 employees. So we've had clients that didn't believe they were eligible for a cent, work with our people, and come back and tell us that they've got $1 million coming. And that's a great result. It's just $1 million of free money. And the folks that we work with do it on a contingent fee basis. One key critical factor or difference, our folks work on a contingent fee basis, 10% of what they recover. They also are they're a tax law firm. And as lawyers, they'll give you a written opinion that you qualify. And so your qualification is premised on the idea that you've got a written legal opinion. And so if you go in an audit scenario, you've got that to back you up. And that is going to help you avoid a lot of the problems that people are talking about in terms of being nervous about actually applying for the money and having to claw it back. One of the key differences in the way people looked at it, and I was guilty of this. I looked at the rule when it came out, and it called for a quarter over quarter, year to year decrease in revenue of in excess of 20%. But the key our people found is that that provision goes on to say, or other financial impact. And people we work with as attorneys have been looking at the IRS rulings, looking at the IRS decisions and guidance, and they've come up with a solid set of criteria, a solid set of questions to guide you through to make sure that you're not overlooking your eligibility. It's free look. And we had one client who was anxious about it. And I finally said to him, like, look, why don't you just take a look at the returns and see how it goes? If you're still uncomfortable, if you've gone through the analysis, it's not going to take you that long. You just got to give them the returns and have them ask you some questions. And once you've been through that, if you're still uncomfortable, then don't sign the amended returns and don't do it. But there's no reason not to just look. So in conclusion, we put this word out over social media and in email blasts and newsletters. If you think that you don't qualify for the ERC, would you please reach out to my firm? You can get us through LinkedIn. Here you can find us on the web, West Coast Franchise Law, wrlawgroup.com, westcoastfranchiselaw.com, and connect with us. We will set you up with somebody who will actually give you a solid look at whether you are eligible or not and whether you've got some free money coming to you. And you can either solve problems or stash the money away for opportunities. And I've got clients doing both. And I just can't urge you strongly enough to reach out and let us connect you with somebody who can actually take a look and give you a written legal opinion that you do actually qualify. Thank you.